Hey everybody, welcome to Trading Futures with me, Anthony Crudele. We have a great show for you today. I will be joined by trader Raghee Horner, chiropractic physician Dr. Tom Voitas, trader and performance coach Dan Hodgman, and last but not least, futures trader Dani Sittloh. Welcome to Trading Futures. Raghee, my friend, how are you? Thank you so much for joining me. So Raghee, you've been a successful trader for quite a long time, and what I love about you, because I get to know you a little bit over the past year, is that you have such a simple strategy and philosophy. How do you keep it so simple?
I keep it simple because I want to keep it profitable. And I think the human mind wants to complicate things. We all go through that bell curve of wanting to learn everything. And then I think the better we get as traders, we just start to whittle things away until we know it works and we stick with it, because the market is ruthless. The market will tell us this is working, this isn't. And you stick with what you know has been adding to your P&L, and that's keeping it simpler to me.
Yeah, I mean, you started trading at a very young age, learning about markets. I'm curious, how did you find a strategy that fit you?
When I started trading, it was in the late 80s, early 90s, and I will say it was easier. There was less access to so many ideas, so many indicators. Things were very simple. There just weren't the number of books. There was no internet. We didn't have as much to have to process. And I knew trend following was definitely something I wanted to do. It felt right. I used to skip class in high school, go surfing. You go where the wave takes you. So that was something I was very wired. And I think, okay, well, price action and the wave are pretty much the same thing. How can I apply something that I already feel so comfortable with, which is just go where that flow takes you? And I think that's where trend trading is something that just comes naturally.
Since you and I both believe that trading is very personal, what's a piece of advice you could give to some of the young new traders out there that are searching for a strategy?
Sure. I think the most difficult thing is to not want to completely emulate somebody else. I kind of use a superhero analogy. You know, Aquaman can talk to the water, you can talk to fish, Superman can see through walls. You figure out what your superpower is. Mine was really feeling the flow of, going back to surfing, feeling the flow, following that trend. I knew that I kind of operated through life that way. I think people need to think about how they're operating through life. Are they people who find themselves in the contrarian side of an argument? You're probably going to trade that way. Maybe people have quicker, they like a quicker time commitment to something. They want to keep things moving. They're probably going to trade that way. So probably the worst thing you can do is try to shoehorn yourself into a strategy that doesn't apply to the way you move through life. You watch somebody trade, you know pretty much how they deal with any issue in life, any issue that they're going to come across, good or bad. So I think the first thing is find out who you are, self-awareness, apply that to the markets.
Yeah, I love that. We're actually going to talk with Dr. Tom later in the show about self-awareness. Raghee, what is your strategy and what are you going to show us today?
Fantastic. Trend following 101. How do you recognize when you have a real edge in the market where rather than being the first person in on the trend or staying too long and overstaying your welcome, how do you find out this is the flow, this is your wave, this is the one that I want to paddle out to, and being in the right spot? So it's very much going to be a trend following approach that I think anybody from any experience level and in really, frankly, any market can apply quickly.
Awesome. You ready to go to the charts?
Let's rock this.
All right, everybody. Next up, Raghee is going to show us how her grab candle indicator works. So stay tuned.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit learnfuturestoday.com to see what adding futures can do for you.
Welcome back, everybody. Raghee is still with us. Raghee, I pulled up a chart on TradeStation with your grab candle indicator. Can you please explain to us how it works?
Absolutely. This was my effort to decode Charles Dow, decode the idea that they are 4 market trends. And if I can start every bit of analysis with understanding if I'm in an uptrend, downtrend, and this is the important part, congestion or consolidation, I can pick the best strategy that's going to match the type of behavior we're seeing. So the green grab candles are going to denote bullishness. the red bearishness, and the blue is a pause or a more neutral psychology. The two shades of each color, light and dark, just denote an up and down close. The reason that they change colors has everything to do with these moving averages that are on the screen. The 34 EMA, or exponential moving average, on the high, the close, and the low. We close above them, they're green, below them red, and inside them, they're blue. So the idea here is to be able to find out which one of the four market trends we're in and apply either a trend following or a sideways market strategy.
Let's go over this chart and maybe show us how you would execute some of these setups. Tell us maybe right in here what's going on.
Fantastic. So what we're doing is we're always going to step back and look at the trend that was. So if I see all the red grab candles, I'm carrying with me at this moment a more bearish psychology because it's been working for me. We shorted in here, we shorted in here. I'm still relatively bearish even in an area like that. However, there's two things that I can do to A, protect myself and initiate a trade. Right about here, I'm still shorting, but I'll also be buying a call as a safety net instead of putting in a stop loss, because if I had stop losses in here, I would have been taken out in that volatility. So when I believe in the macro momentum or the macro narrative, I'm going to use this as an option as a stop loss. Here, at the first green, I'm going to realize that the trade might be moving against me like it was before, but I'll stick with it. By the time I plotted 3 to 5 of these and I realized the narrative shifted, this was obviously when Jay Powell did his famous pivot, I'm now on the wrong side of the trade. I'll go ahead and take profit, take a small loss on the most recent entry, and then start looking to the long side because, and this is the important part, the candles are now steadily green for at least 5 candles.
So 5 is a rule.
5 is a really good guideline because oftentimes we can see 2 to 3.
Head fakes.
Exactly. And once I get 5, I've got a pretty good organized market.
Let's go over a scenario. So would this be a long now that it's 5 green in a row?
Correct.
Now, where would you put the stop? And I see how, it's trending, and obviously it looks real good if you're staying in it. But as we know, there's a lot of ebbs and flows in here. Where are your targets? How are you getting out of this for a profit, or are you always waiting for it, to maybe violate? I'm curious how that works.
That's a fantastic question. So I always treat targets as 2 finish line targets and then a safety net. So I think it's very important for us to pay ourselves while we can, not when we have to. So I'll have 2 proactive first and second targets that are going to be predicated on what I call price movement ranges, which are the daily price movements we see out of any market. In a case like Dow, I'm probably 35 to 40 points on a daily time frame. I got to pay myself, I'll pay myself again. But if the trend keeps working, I'll continue to buy pullbacks. But now I'll start buying potentially on the next few pullbacks. I'll keep buying my put options if I want to, or I can put a stop on the opposite side of that red 34 EMA low. So, and then we have to let the market just kind of do what it's going to do. The worst thing trend traders can do is scale out too quick. Let's see how high is high, back off, and let's see how far the market can go with a break-even stop.
So to me, it's trading around a core position. You have a theme that you've talked about many times with me, that you have the macro theme, the technicals here. You're in, you're out, you're in, you're out, and you're trying to hold a position the entire way. And sometimes your stops are just because you really believe in it by using options.
I think the options give us the latitude to not be so dedicated to a certain price being what gets us out, especially when I have macro faith in this case, a central bank pretty much ensuring that we're going to see liquidity in the future, historic buybacks. I'm not going to step in front of that kind of macro tidal wave.
Yeah. I want to move on to the next chart I pulled up, and that was a 60-minute. And the reason why I pulled this chart up was because I know you look at daily a lot. But I'm curious, do you use this on other time frames? Is it the same rules? Can you even use possibly different charts? Like tick charts or other things like that?
So what I tell everybody, forget what's there.
Okay.
Just read the grab candles again. These happen to be 1 hour time frames versus a daily. So the interval has changed, the interpretation doesn't. The price movement expectation is different. So now I will step away from a daily, say 35, 40 point price movement expectation to say 7 to 13, because I want to reflect that time frame. Time of day is going to be a little bit more pertinent, but those are nuances that most day traders are pretty familiar with. But the actual analysis, the market trends, are the exact same.
Great stuff, but we're not done yet, Raghee. Hang tight. Next up, everybody, Raghee will show us some opportunities that she's seeing and how she'll be executing those trades. Stay tuned.
Why trade with TradeStation? It's innovative, easy to use, and totally freaking sweet. With powerful tools to track and execute your trades and low per trade commissions on stocks, futures, and options. Upgrade your trade at TradeStation.com.
Welcome back, everybody. Raghee's still with us. Raghee, let's take a look at some of the markets that you're currently in and some opportunities you're seeing going forward. Let's start off with the 30-year bond and daily chart.
I love this chart because this is a chart that's been working with me for, about 3 quarters now, and I think it's going to be working for another 3 quarters at least. And what this is a play on short yield, of course, therefore we're long bond. We take a look at what's happening with the central banks all over the globe. We know there's going to be another race to lower and lower and lower rates. One of the best ways to play it is to get long bond. And when you look at the grab candles in a situation like this, again, looking at the green grab candles and even these small blue and red pockets of opportunity, those are our opportunities to get long. And so we're going to continue to do that on each and every transition from blue to red and build that long position to take advantage of yields going lower.
So macro theme, followed up by technicals that support it. You've been in this trade, you said, for 3 quarters. Quick question before we move on to the next market. Are you just staying in futures the whole time, options? How are you holding positions? And where do you work stops to prove that when you're wrong?
One of my favorite things to do, and you're exactly right, I want to find macro opportunities but use the timing of the charts. I think a lot of macro traders, they lack the timing that us technicians have. Technicians oftentimes ignore the macro. You put them together, you're a well-rounded trader. So in a situation like this, when I've got such overwhelming macro, when I am buying, a lot of times I'll be buying puts because I don't want to have a price delineated stop loss. I want to have that nice safety net. Yes, there's going to be a window of risk, but I'll buy puts when I get long. So I'll buy 30-year bond. I might buy puts in TLT. I might buy puts in the 30-year. Same thing I'm doing with the 10-year bond.
Gotcha. So you'll stay long the futures, but then when they get near an area where you think it could be teetering, you buy puts.
You got it.
Love it. All right, next market, we're going to talk about gold, also on a daily chart.
Gold is going to be a very similar narrative. I think that long gold, long dollar, and long bonds have been very much the bulk of my personal portfolio, and a lot of times those personal portfolio symbols are going to make their way into trades. So gold is a little trickier, it's a little lumpier. There was a short time that I had to sit through a lot of this noise. One of the things I want to point out in this chart, of course, the green is easy, but where it gets really tough is, well, Raghee, are you selling this? And I'm not. And the reason for that is, again, stepping back to the macro, I never had a macro justification for wanting to take a short position in gold. So just because I'm no longer long doesn't mean I'm just going to stop and reverse and get short. I'm going to step back to the macro and I'm going to be patient. And Charles Dow talked about 4 market trends again. Broken uptrends oftentimes become distribution. Distribution highlights respect the trend that was and buy oversold levels. And the last time we stepped in and bought gold in a big way was at an oversold 1277 level. And we're going to continue to now redeploy that pullback buys because we've got the steadiness of the green grab candles.
Macro is a big part of what you're doing. And,
Sure.
and you really, I'm assuming you don't make any trade decisions until you have this to confirm it.
It's a theme, I like to have a theme behind my trades. If I'm day trading, the macro isn't as pertinent. The calendar might be, near-term fundamentals might be, time of day, volatility. But when I'm looking at a daily time frame or a weekly, I really want those macro forces being sort of the waves that I'm surfing. And then letting the charts, letting price action fine-tune what I want to do within that bigger macro picture.
Next market we have is the dollar, also a daily chart.
And it's a pretty ugly looking chart until you step back and say, wait a minute, what is the dominant color? And if you can start every analysis with asking yourself, what is the color that I'm seeing the most? It's going to keep you from being a contrarian, which I am not. Again, trend following is the way that I want to continue to build my day trading book, my trading book, my investment portfolio. So this might be a little uglier, but you think about the fact that we still have a central bank that was really the last one to start to go dovish or accommodative. You've got the Australian central bank, you've got the Japanese central bank, much more dovish, much more accommodative than the US. So the dollar is just going to be, as they say, the cleanest shirt in the dirty laundry. I think even now, even though we're expecting maybe rate cuts for the next 4 to 5 meetings, we could see the dollar still be one of the stronger currencies globally. So I want to stay long. So when I get this kind of noise, it's very important that I think about how can I be long against the euro? How can I be long against the Swiss franc or even the yen?
Last chart for today. I know this is trading futures, but you want to talk about the utilities.
You are the
What are you
man.
seeing here in the daily?
I love it. I love that you shared this, and thank you so much. And I think one of the things that a lot of futures traders neglect is that you're looking at the market from a 40,000-foot perspective. This is the grocery store to the world in so many ways. This is the place that bonds and currencies, this foreign exchange would be another place, obviously. But when you understand where commodities and futures are going, the stock market is going to be, in many ways, moving according to that. And in this case, what we're looking at here in XLU, where the utilities, the ETF utilities, is a bond proxy. And history has shown me that being long utilities works as long as I'm long bonds. And of course, you can appreciate this from my neck of the woods, Florida Power and Light, hurricane season. This is the number one stock in this particular utility is NextEra. That's Florida Power and Light. So there's a hurricane implication there, but I like to stay long utilities in hurricane season and in long bond situations.
Great insight today, Raghee. Thank you so much for sharing that with us. Next up, everybody, we will hear from Dan Hodgman with Top Steps Moment of the Week. Stay tuned.
Why trade futures with TradeStation? You can trade over 80 products from home, work, or on the go with a powerful, easy-to-use interface and prices that let you focus on padding your wallet, not emptying it. Upgrade your trade at TradeStation.com.
Welcome back, everybody. I'm now joined by Dan Hodgman. Dan, what's Top Steps Moment of the Week?
Anthony, well, with Labor Day coming up, I wanted to talk about something a little different. Lately, we've been talking a lot about some of our funded traders, but when it comes to holiday trading, markets tend to react just slightly different. It has a different little bit of a feel. So I took a look back at some of the more recent holidays we've had this year and found how the markets reacted, how they shifted, how they maybe even changed a complete trend. And that's kind of what I want to talk about today. So the first thing we're going to talk about is gold. We saw June had that huge rally where we hit 6-year highs. And what ignited that? Well, what's amazing about it, we're coming into Labor Day. What ends the summer, what kicked off the summer was Memorial Day. And right after Memorial Day and right before, the market started reacting just slightly different. We found a nice support level on a downtrend market. If we're looking here on this daily chart, it was a downtrend market. As soon as Memorial Day hit, the market completely shifted. We led to a big opportunity and changed directions completely. Volume slimmed up. The market was able to accept into different ranges. So gold made the first move of the summer.
Question about this one, because going against the trend.
Absolutely.
How does the trader manage risk in this situation? Not just below the trend line? Is it a wider stop, shorter stop?
That's a great question. And one of the most important things when you're trading around the holidays is you have to accept the fact that there's going to be a little bit more risk on the table because these markets tend to see a little bit more slippage, liquidity is a little bit thinner. So you have to be prepared to accept more risk. And if you're not a trader that has a little bit of room, or you're just uncomfortable putting too much money on the table to find some opportunity, these are the types of days you need to stay out. And I think that's the most important thing.
Cool.
So the next one we have here, we all remember Christmas. We almost entered into recession. So the Dow Jones here, leading into Christmas, leading into that holiday, the market was in a downtrend. We had some news coming out that really started to accelerate this thing extremely fast. As soon as that holiday hit, December 24th, we hit our lows. Volume was extremely thin. Liquidity was extremely thin. And it led to some scary, intimidating trading. Again, that goes back to your last question. How do you manage risk on days like this? It gets really difficult. But the crazy thing was this market followed up the next day with one of the biggest up moves we've seen in a long time. And it led to us now making all-time highs in the market. And so we saw a massive transition on a holiday with thin volume and thin liquidity. And it created some long-term opportunity.
Yeah, and I asked that question about managing risk because I've ruined a lot of holidays by losing too much going into a holiday. So I know in my mind it's always keep myself a little bit tighter. If
Absolutely.
I hit, whatever my normal number is, I trim it a little bit to make sure that I don't ruin the holiday.
Absolutely. I even will stay out a lot of holidays just
Exactly.
because it gets so thin. And the last one here, we'll keep it a little bit more simple. Looking back on the 4th of July, I am a bonds guy. I love talking about bonds. The bonds were actually slightly overbought if we were looking at the trend here. And 4th of July, the day after, volume still thin. It was a Friday. Everyone's already on vacation. Bonds don't really see three-handle moves in a given day very often. And so July 5th here, we can see that the down day. That led to a nice sell-off. Again, thin markets, and it worked its way right back to the trend. It ignited that move back down. And I think that's the big thing. Holidays love to ignite new moves.
It is interesting how you see a lot of highs or lows when you look back right around holidays.
Absolutely. Absolutely. Yeah. So just a couple lessons in execution here for holiday, for Labor Day. Obviously, holidays lead to thinner markets. If I haven't drilled that home enough yet, I mean it. They lead to thinner markets. And thinner markets tend to lead to larger and faster moves because there's nothing there to really stop it. Only trade them, like we said, if you have that risk appetite. If you're not very comfortable adding a little bit more risk, maybe it's just a day to take off and actually enjoy that holiday. And lastly, Labor Day, end of summer trading. We're going back to school. Markets are going to be just as fun as always.
Great lessons. And my advice to everybody, like I already said, don't ruin holidays. Keep your risk a little bit tighter. But Dan, great stuff as usual.
Thank you.
Next up, everybody, Dani Sittloh will tell us what's on her radar using Wazzabull. Stay tuned.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit learnfuturestoday.com to see what adding futures can do for you.
Welcome back, everybody. We're now joined by Dani Sittloh. Dani, what's on your radar?
Hi, Ann. So today I thought we would talk about commodities. It's food, it's summer, I like to eat. However, the products that I chose today, I haven't eaten for 15 years. I'm allergic to both of them. So, but there's money in them, right?
Yeah.
Absolutely. So today's first alert is with wheat. It's a bearish alert. Trades 3% higher than the previous day close. It's a 1-hour outlook. 56% chance it'll hit the downside target. 44% chance it'll hit the upside target. Interesting alert. The update report, even though it was an hour outlook, it was even shorter term. It hit it in 12 minutes. Yeah. So it hit that downside target at 56%, 505.5. There's the alert. Pretty interesting for me as, again, I'm an indices person. So if I feel if the S&Ps or the NASDAQ or the Russell or even the Dow aren't performing, they're indecisive in their trade, I'm looking for other markets to become familiar with. And if alert happens while I'm just sitting there watching the markets that I usually watch, I think, okay, maybe I should take a little bit of a side turn and look at a commodity like wheat if this is the alert. Get to know it.
Why I use the wheat alerts and the soybean alerts, I do have them subscribed to my phone, is because I don't trade these markets, but because they impact our lives and because I want to stay in the now of what's happening with these markets.
Yep.
That's why I look at these alerts. And just one comment I want to make. 1-hour outlook, don't see those too often. Hit it in 12 minutes. This is right up the day trader's alley for these types of alerts.
Absolutely. So there's one more thing I wanted to show you. You can expand the information, and again, I think I showed it last week, but there's a table of additional information and statistics that I think is really important. It'll hit it on the hourly alerts, it'll hit it on the daily alerts. It tells you the percent of the declines, which we went over already, but the average move decline and then the maximum move of that decline. So you know how much you're going to make. Are you going to make $2 out of it? Are you going to make $11 out of it? You have also the average increase should it not hit that downside target. You have the reward to risk ratio. You have your downside target repeated again, and then your upside target repeated again. Below that, there's also the historical occurrences. So this is all back-tested data that's done for you, for me, that we don't have to touch. It's there.
Yeah, I mean, once again, everybody, these aren't just alerts. They have statistics behind them. And what I really like about what they explain here is all the different things that can help you manage risk.
Yeah.
You know, that's what really I think this section really does help me with.
And it expands my awareness of how I'm looking at my trades. I mean, I'm a price action person, so I'm always looking at the dome, right, or the DOM. Or the matrix. This is, gives me a deeper dive into what's really happening and how can I maximize my profits and minimize my loss.
Yeah, because if you're going to be trading off of these alerts, this is the type of information you need to see.
Absolutely. Okay, so next up, we have soybeans. Again, so allergic. But anyway, soybeans trades more than one standard deviation below the 5-day moving average. Think Bollinger Bands. It's a 2-hour outlook. 57% chance hit the downside target, 43% chance it'll hit the upside target. Okay, let's see what happens. Update report. This is a really interesting one that I like a lot because I'm a 50% girl. So the update report reads, soybeans closed below the alert price in the predicted direction. Okay, so it's in the middle, it's on the downside. It doesn't quite hit the downside target, but it hits in the middle of the two target prices. And for me, I love the 50%. So I'm always looking between those two prices, no matter what product I'm looking at in my targets.
So it didn't hit the lower target or the higher target?
Correct, but in the predicted direction. So
it stayed in the direction within the 2-hour outlook?
Yep.
Gotcha.
Yep.
Okay, interesting. Great stuff, Dani, this week. Thank you so much.
Absolutely.
Next up, everybody, in Beyond the Charts, we will be discussing the importance of self-awareness. Stay tuned. Hey, everybody. Thank you for tuning into the show. To learn more about the charts I use, Wazzabull alerts, the basics of trading futures, and how you can even get funded to trade futures, please visit anthonycrudele.com. Now let me take you right back to trading futures. Welcome back, everybody. Raghee is still with us, and we are now joined by chiropractic physician, Dr. Tom Voitas. Tom,
Hello.
Thank you for joining me today.
Well, thank you for having me.
Talk to us about the importance of self-awareness.
So having practiced chiropractic for 37 years, I don't have just the biomechanics, kind of the Crackham practice. I'm really more interested in someone's whole well-being, so their emotional, mental, physical, and spiritual well-being. And so that just kind of led me on my own journey of self-awareness. And so for 30 years, I've been studying with Native Americans, both in South and North America, and to understand their healing paradigms, because I wasn't necessarily finding the answers that suited me. And so when I began working in Native communities, I went through their ceremonies, and the question basically becomes, who are you? And so it's a little bit rigorous, sometimes fasting for 4 days, no food or water, to really kind of uncover and unwind all of the unlearning that we have to do. The judgments, the self-criticism, the blames, those kinds of things, the anger inside, because we all have it. And so it's difficult to actually go to that place, which I think is why a lot of people don't want to go there, because you have to have that level of vulnerability and honesty. So that's just kind of been my life path, in understanding the nature of things like gratitude, of respect. Now, one of the elders, I love the way they teach, they said there's a reason God gave us one of these and two of these, because we forgot how to listen. We're always thinking ahead and just talking. And so that's something I really appreciate too, is the stillness that I found working with Native people, because anxiety and stress is one thing, and there's a lot of ways to dissipate it. You can go ride a bike, you can do yoga, but I'm looking for peace inside and tranquility. And through unwinding my own judgments and criticism and sense of at times of unworthiness, which personally I believe is kind of endemic, because if we were all living here on earth as God's children, then we would be treating ourselves and others differently. And those are difficult concepts, I think, for people to understand. So that's one of the things that I bring into my life and my practice.
I think that people are stubborn. We're not willing to take that step to find out who we really are.
Uh-huh.
I had to have a heart attack at 36 years old for me to really dive into finding out who I really am. It sounds so strange, even me saying it. At 36 years old, I needed to figure out who I was, and it took for me to have a wake-up call. But for those traders out there listening, and for everybody out there listening, what's a first step they can take without having to go through something like I had to with a heart attack to start becoming more self-aware?
The thing is, again, referencing Native communities, they have rites of passage where they put people at young age, 12, 13, 14, into fasting, and so they're actually challenging themselves to see like what they are made out of and who they are inside. And so because we don't have that, life will give it to us. And you had a heart attack. I had at times levels of depression that prompted me to, I don't want to live this way anymore. And so I didn't always know where I was going, but you keep moving until you find the right answers. And so first of all, you have to have the willingness, the motivation, and the vulnerability to even want to make a change. And from there, even simple practices like gratitude. And just in reframing gratitude as just thank you, working in Native communities, there's a much more sense of communion. Like even the Lakota, the Sioux Indians I work with, they call water meni. Meh is my, ni is my spirit, my life. So even talking about it that way, we don't think about water. We don't think about air in those terms. So even beginning to have an awareness of that can make a huge difference. It starts to change your awareness. Watching self-judgment or judgment of others, we do it constantly. That hurts the heart, hurts the soul, and it hurts human interactions. Native people that have worked in South and North America, they say that envy is the most destructive force on the planet. You have something that I don't, and I want it. Comparison, they said, as soon as you compare yourself to somebody, you're lost. And we do that also. Some of it's because we're looking for ourselves, we're looking for approval, we're looking for acceptance. And until we can begin unwinding all of that fabric, either through our culture, family history, religious institutions, whatever it is, that we can't truly find ourselves. We're referencing ourselves from something outside.
If you could ask us and all of the traders out there listening to this one question to see if we're on the path to seeing if we are self-aware, what would you ask us?
You know, one reference point would be, are you truly happy? And the other thing is we have to become aware of our shadow side. Are you aware of your faults? Are you aware of that? Because that's where you're going to find a lot of your healing too, is coming to grips with those.
Raghee, what are your thoughts on what you're hearing so far today?
I look at it in two ways. I look at it as Raghee, the human that's existing amongst her friends and her family, and then Raghee the trader. So the Raghee the trader says, well, am I being critical of my trades? Am I being self-aware enough to block me out of my analysis so I'm not carrying my last loss or a bias into my next trade? And that's a superficial level, but for us, that's bread and butter. That's what we do. So if I could start there and even use some of the reference points at something as simple as trading, and then take that deeper, I think that's a great place to go. I mean, nothing more to me insightful than watching someone trade. I will know who you are in 10 minutes.
You're so right, Raghee. I mean, great stuff today, Dr. Tom. Where could people learn more about you and maybe give us some material to go out and read to see how we could become more self-aware?
Having worked in Hindu cultures, South American cultures, North American Native cultures, there's such a diverse framework that I work in, and I'm more into, honestly, personal experience than I am reading.
Okay.
So I'm not the best reference for looking to books to read. So Barnes & Noble or Amazon is filled with books on self-help. But I think if you want to explore Native spirituality or shamanism, I think those are really good reference points. There's actually a wonderful book by Don Miguel Ruiz, The Four Agreements, and it's a way of living life from a Native perspective. And one of the questions is, who am I? What do I care about? Those kinds of questions. Living life with impeccability, being true to your word, those kinds of things. It's a really good read, actually.
Awesome. Dr. Tom, thank you so much for
Thank you
joining
so
us
much.
today.
Appreciate it.
Raghee, thank you so much. Hey, everybody, thanks for tuning in today. You can catch all of the episodes on anthonycrudele.com, and you can follow me on Twitter and Instagram. See you next time. Now, I got the card stuck a little bit today, but my aim is...